What's good, Double T gang? It's Tahmid back here for another video, another day, new video. Let's get it. So today I want to talk to you about TikTok and TikTok taking over the investing and trading world. Seems like this is where the kids are getting their advice on making money and investments. So, I needed to scope out what was going on. But before I go any further, I noticed a lot of you, I see you, have been watching videos without actually subscribing. As you may know or may not know, making videos is real hard work. So you gotta support, small time creators. So make sure before you go any further to hit the subscribe button, hit the bell button, and yeah, do your thing. Like, comment, subscribe, share, you know the drill. This compilation was done by TikTok. The channel, I'll link down below in the descriptions. It's my first time watching it, just like it is yours, I hope. So we'll get right into it without further ado. Make money with this investment TikTok compilation. Let's go.
Anything else for you?
Nah, that'd be all.
$11.98.
$11.98. Nah, I could buy more contracts. I'm good.
Babe, can we get this comforter set?
$164 comforter set. I can get a whole new Apple shirt for that. Nah, I'm good. $700 for a TV. Nah, I can buy more Tesla contracts. I'm good.
Here's a quick stock tip. You want to know if your stock's going to perform well the next 12 months or if it's going to run into trouble? Let me show you. First, go to google.com. Then type in your stock symbol, earning report, and then type in NASDAQ. Click the first or second link, in this case, the first one. You're going to scroll down and run into this chart. What this chart shows you is the estimate sentiment that analysts give for the next following 4 quarters. You're going to want to focus on next year, same quarter. And you can see the stock's expected to keep rising. Next quarter, rising. Next quarter, still rising. In this case, Target is expected to do good. Let's try another stock, Kraft Heinz. Starting off a little rough. Next quarter, about the same, not impressive. Final quarter, still decreasing. Looks like Kraft Heinz is still going to be having trouble.
How to retire a...
So what this guy is saying is partially true. So earning per share is a way to sort of think about stock performance, because if earning per share, it's basically the profits of a company, keeps going up, stock prices logically will also keep going up. But the issue with that is, he said, those are future expected earnings, and those are analyst estimates. Emphasis on the word estimates. And analysts, as great as they are, they spend their time studying and analyzing these stocks. They don't know much more than the amateur investor analyst out there, because the future is complex, business is complex, and there's so many moving parts. So often analysts turn out to be very wrong about earning per share estimates and a lot of other things as well. So just something to keep in mind. Google doesn't always have all the answers.
Retire a millionaire. If you're between the age of 18 and 25 and you live in the USA, step 1, open a Roth IRA. You can do this by going to betterment.com, clicking get started, invest for retirement, not currently retired.
I've heard of
How old are
Betterment
you? Let's
before.
say 18. Annual pre-tax income, $6,000 because you're 18. Type of retirement account, Roth IRA. Click continue. Drop a spicy email. Get you a strong password. Just finish filling all this out, open an account. When you're done, you'll be good to go. Step 2 is earn or obtain $250 a month. Then contribute that to your Roth IRA. By contributing like $250 a month from the age of 18 all the way down to 65. And if you do $500 a month from 18 all the way down to 65, maybe you're balling on a budget, $100 a month, not bad. So you don't start till 25, $500 a month, still looking good. And that money is all tax-free.
Pretty legit advice, kids.
Seriously, it's tax-free.
Here's a life hack that's gonna save you tons of money that they didn't teach you in school. Okay, so most people buy a single family
Where's
home
the
and have to pay
Lamborghini?
$2,500 a month for their mortgage. They get no tax deductions and no write-offs. Instead, use the house hacking strategy and buy a multi-unit property. Live in one unit for a year and rent out the others. If you charge $2,500 a month for each of the units, that's $7,500 a month, which should cover the cost of your total mortgage. You might be too young to buy a house now, but You'll buy a house one day. Be sure and save this video.
Let's say you get a mortgage on a
All right. Only if getting 3 multi-unit rental properties was that easy, he kind of missed a few steps there. Personally, you can watch my own videos and Money Talks where I talk about personal finance, and I'll tell you the much easier way to build wealth than real estate is the stock market, and you can get started at a much younger age because there's much less upfront capital needed to get started in the stock market versus real estate. So that's just something to think about early on. Of course, once you diversify, you got more money, you're actually balling, not just balling on a budget, then you can think about really diversifying into real estate and physical hard assets, etc.
house for $300,000. You took that mortgage out today,
Oh
and
no,
it was a
another real
30-year
estate
mortgage
one.
at 3.5% interest. For a mortgage like that, your monthly payment would be about $1,347.13. And
Big
in total,
money.
you would be spending close to $500,000 to buy that house over the next 30 years, because almost $200,000 would be spent in interest payments. But let's say you could put a little bit extra aside and you paid an extra $100
Nice
every month.
spelling.
That $100 would save you 20 grand, and you would pay off your mortgage 3 years faster than you would have otherwise.
Damn.
And that's just $100. Let's say you get 2 roommates
What
and
he's
charge
saying
them
is
both half the
correct,
price of the mortgage and
especially
continue
if you
making
got a
your normal
house and
payments
you're
as
paying
well.
a mortgage
This
and
would mean you're
stuff.
making double mortgage payments each month. You would save $121,000 and pay off the mortgage 18 years early. Don't tell me that's not sexy.
Yo, I just got a new job
He's
and they
right.
offer a
That's
401k and a Roth 401k. Which is better? We're both retirement accounts, but obviously I'm
guy
better.
looks
Because
really
you
young.
invest in me with pre-tax dollars, you have to pay less taxes at the end of the year. And my employer offers a match. Dude, my employer offers a match too, but because you invest in me with post-tax dollars, you don't have to pay taxes at retirement, meaning all of the money that grew in your account doesn't get taxed. Wait, so 401k, don't pay taxes now, pay taxes later, and Roth 401k, pay taxes now and don't pay them later? Exactly, so all that growth is tax-free.
Nice.
The average
So this young guy, he was spitting facts. In the Canadian sense, the totally tax-free, tax-advantageous account is the TFSA, tax-free savings account. The tax-deferred, where you contribute and you get a tax break and you don't pay taxes until the very end in retirement, that's called the RRSP in Canada, the Registered Retirement Savings Plan. So that's our version of the Roth IRA and the 401k.
4 years at a private college is
guy's back.
$50,900. And
It's
a
the
lot
real
of people
estate
get
guy.
a student loan for the whole thing. One of the main reasons people say you should go to college is because you can make more money afterwards. But the truth is, most people struggle with student loan repayment for the rest of their lives.
Never
The
even looks
average
at the
interest
camera
rate
still.
of a student loan is 5.8%. Just the interest on a loan that big would be $246 a month. What if, instead of going to college, you just invested the same amount you would pay in interest on that loan into the stock market at an average return of 8%? Well, you'd retire with $1.5 million.
All right, that's pretty much it. So real quick, there's an issue with that last video on line of thinking. The main issue with that is the reason you're going to college or university is the future expected payoff of doing that, right? And generally the statistics, the data shows that the lifetime earning of a college or university grad is hundreds and thousands of dollars more over the longer term, and there's nothing stopping you from investing and as you go along and earn more, and the higher the lifetime earning, the more you have to eventually invest. So the actual mathematics of it all is not as simple as it's made out in that video. But overall, I'm seeing some decent stuff in TikTok. It's a hit or a miss, just like most social media, I guess. But some of these videos are great. Some of them kind of mediocre. I'll be looking forward to reacting to more. If there's other things you want me to react to, make sure to put it in the comments down below. That's it for me, Tahmid, signing out. Peace out. Later.